To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Good morning, AJ.
Hey, everybody. How are you?
Doing well, doing well. Today is May 26th. We're heading into a holiday weekend. Just got some pretty interesting economic news. We've had a pretty interesting week. Last week, we talked about the market breaking out. AJ, what are you looking at? What information should we be deciphering? How should we be digesting everything that we're hearing today?
Well, I mean, all eyes are on the debt ceiling and the debt ceiling limit. And are we going to raise that debt ceiling limit, or are we going to go into default? And that's the big question. Will our politicians lead us wrong? Or, excuse me, I'm about to sneeze. Or will our
Bless you live.
That's not what I expect live. I didn't even get a chance to mute it. Will our politicians lead us into a problem, or will they come to a conclusion? And I think it's the only person it's really going to be bad for is them.
And the chatter this week was that they are getting near a solution, right? That's what the rhetoric is.
It keeps coming. It keeps going. I'm just glad I'm here at my beach house, Sip, where I can separate from all of this shenanigans. Because, man, it's like following a soap opera, as the stomach turns.
And what is our deadline? By when do we need to make a decision?
Next week.
Next week.
Well, and, depending on who you talk to, the decision should have already been made, because by the time a decision is agreed upon, it then has to be voted on, and then it has to be implemented. And from what I understand, that takes 10 days. So I have it doesn't look good. But at the same time, you've got things like our GDP coming through. You've got today we had our consumer expenditures price index coming through. So a lot of, people who run the economy, consumers, they're not fazed by this right now, or they haven't been.
So we're keeping an eye on the debt ceiling chatter, right?
Mm-hmm.
Obviously, there will be comments made here or there that may lead the market
up
or down in a certain direction. Otherwise, we had some other economic news this week. We had new home sales. There was some GDP today, durable goods, inflation. Which one of those are we taking into account most? I would assume it's the inflation chatter again.
Well, so the Fed, the Federal Reserve, they've been going back and forth with different Fed presidents making comments this past week. And the comments have been overall hawkish, which means, they're maybe focusing on even doing more interest rate hikes. If we take a look really quick at my screen, I've got up the Investor Fed Watch tool. And last week, we were more leaning towards the Fed holding back this June 14th and 13th and 14th, that they were going to take a moment and take a breather. As you can see here, that's changed. A lot of that had to do with our GDP numbers. GDP numbers were revised higher. And today, our personal income and outlays numbers, the PCE, that number is stronger than ever. In other words, it seems like the Fed has to be more diligent with their monetary policy to try to get consumers to stop spending, right? To slow things down.
And so the consensus is the 25%, right? We're continuing to grow in favor of that happening.
Yeah. So it's now over 50%. 1 week ago, the consensus was 80% to no move. and it was 17.4% to a quarter point rate hike. Now it's like 50-50, even swaying even more. One day ago, it was 50-50. Today, after the PCE release, man, it's like 60-40. So
Well,
the
let's
Fed,
dig into the PCE a little bit, maybe see if there's if it actually if it's a valid concern or if it justifies it.
Yeah. If I come to today's calendar, right? And let's see if we could pull this up here. We're talking specifically about the personal income and outlays report. And so you can see here, personal income, it's a little bit higher than what we had last time, and it's around what was expected. That's the income increase. So that's good, right? It's back in alignment with what we were expecting. The Fed would like it to go down a little bit. But now look at the personal consumption expenditures. This is how much we're spending. So last time we expected 0. We revised it up a little bit. This time we expected a little bit of recovery. We doubled it. We doubled what we expected. The Fed would like to see us take a break here, and instead there's a lot of buying. And when you look at just the core price index, this is where you factor out the very volatile like fuel and food, energy and food. It's still high. We can't seem to tamp this down, right? Instead of this number going down, this is the number that they really look at. They'd like to see that at 2%. It keeps going up, up, up. So, yeah, investors expect another rate hike, a quarter point rate hike.
And I guess that's the tool that the Fed is using most to tamper this inflation, right? Although we've discussed in the past that it's a bit delayed, right? The results of those hikes. And I guess my question would be, because we've been discussing banks, does this continued increase in rate hikes, do some bank names and financials, are they going to be the most at risk?
Well, so I actually, the Fed, we've talked about this before on this show. The Fed also has this other tool, and that's the bond buying and selling that they're doing. And you can see that if I'm looking at year to date, let's go back a little bit further. So the Fed's been on this move to sell off their bond holding. And if we take a look at all the data, you can see that this selling that they've been doing is just the beginning of a drop in the bucket of what they've acquired over the years since they actually started employing this tool after the Great Recession in about 2008. So they've been saying, we've got to clean up our books. We need to sell off some of these bonds. And so as we start to then zoom in again, you can see what happened. The banks that invested in these bonds, thinking that the bond rates would stay where they are, they kind of started to fail, if you remember a couple of months ago. And so the Fed put a halt on those bond selling, actually did some bond buying to prop up those banks. And then they slowly went back to selling again. And so, you would expect that there would be a weakness. But what has happened is because of those first few banks failing, the Fed, the Treasury Department, the FDIC, they've all become very hyper diligent. And so they're doing things behind the scenes to keep other banks from failing. And so the Fed has returned to this bond selling. And I actually think they're being a bit more proactive. It only takes getting like mud in your eye once before you start to, try to be a little bit more proactive so you don't get mud in your eye a second time. So I do believe that this bond selling, more than the interest rate hikes, is probably going to have a bigger effect on regional banks and things like that. But I think that they're being defensive right now. They're not just letting things happen. They're a little bit more hyper diligent to that.
And when you say that, you mean like some of these warning systems that they've put in place, right? To keep to monitor liquidity, right? Risk, things
Mhm.
like that. Maybe that guy or the team that was working that department, maybe they've, become more on edge and a little bit more diligent,
Mhm.
right?
And I think that they're propping up, so not just having like warning and trigger systems. I think that they've also got I don't know why I'm sneezing. I apologize. Um, maybe I'm allergic to all this discussion about the debt ceiling limit. The scoop is I really feel like they even are taking steps and making sure that there is a safety net in place for a lot of these banks. So if they start to show signs of failing, that they get propped up appropriately instead of just letting them get too far.
All right. Well, that's kind of the economic news that's been leading the charge this week. We did have some news. Well, last
Yeah.
week's episode, we talked a lot about AI, or not a lot, but we did have a
Mm.
chat about it. And this week, I believe the tech sector is being driven by
Uh-huh.
Nvidia, which is a name we've covered a few times. But I'm
Yeah.
wondering if that has anything to do with AI and Nvidia
Oh,
and the
absolutely.
appetite there. And I'm just curious on your thoughts with Nvidia this week.
It's funny because we've got in my family portfolio, we've got a pretty nice chunk of Nvidia that we've had for the long term. I think that we purchased this Nvidia back when Nvidia was trading at like the $20 a share mark, and since then Nvidia has split that those shares, the 200 shares we have now are 800 shares. And as you let me pull up Nvidia stock right here so people can know what we're talking about. So you can see that after releasing earnings, they jumped up about 25%. They're trading at $380 per share right now. So we're a big fan of Nvidia in this household. And the reason is because the CEO is just so forward thinking. He's got a technology, he's got these special chips that are just very good at doing specific tasks. And it turns out they're very good at rendering graphics on computers. So he totally has been at the forefront of the whole gaming boom that has happened over the last couple of decades, because his chips, the chips that his company makes, are perfect for satisfying the gamers. Guess what else those chips have been perfect at doing?
Robot.
Mining. Well,
Oh,
that too, but before that, mining
yeah,
cryptocurrencies.
that
So
demand.
about five NVIDIA chips are like number one for mining cryptocurrencies. So that's awesome. He got that one right. And then guess what? These new AI platforms that are just taking the world by storm, they run best on these chips that NVIDIA corners the market on. Not only that, he's made some infrastructure decisions. I believe that thanks to a lot of the decisions made by the politicians here in the States, NVIDIA is starting to build some manufacturing facilities. Their big manufacturing facilities have always been in Taiwan. Now I think that there's some ones growing here in the States. They'll probably be online in the next couple of years. So, hey, man, that's fantastic. They've got, supply problems that they're solving. They've hit the hot spots with a solution that nobody else has, like repeatedly over the last decades. They just recently released a really good earnings. In fact, if I go back, people were saying, "Oh, Nvidia is done for." If I go back a little bit, um, yeah, NVIDIA was at an all-time high in 2021, and then, of course, because of supply and because of the question around chips, they kinda got hit on the head a little bit, but, they brought themselves right back up in a shorter amount of time than it took them to go back down. This is one of those stocks that, I'm very happy I have in the long-term portion of my portfolio. They're an infrastructure play that's gonna be in the infrastructure of all the latest technology. And with their big gains this week, they brought up the whole tech sector.
Yeah, and I feel like for anyone new that's listening or watching that isn't really familiar with AJ's premium selling strategy, but I feel like Nvidia is a great example of having one of those names in your portfolio that you
Mhm.
have for the long term, but as you implement the strategy, you can collect some premium payments along the way, and then as you see over the 2-year span, the price of the stock, it can come back to those highs. So you're kind of generating income in two fronts, which is the wonder
Mm.
behind a longer term premium selling strategy.
I mean, with options, you can do all sorts of things. There's the selling of premium. There's the purchasing at the price that you want to purchase at. There's the selling at the price you want to sell at. I mean, there's 27 different ways to use options to trade pretty much any pattern that the markets throw your way, not just in price, but in everything. I mean, that's what we're experts at here, is getting those patterns and making use of them, right?
That's right. And since you bring that topic up, we're going to give everyone an opportunity to get a first glance, first rate session, education session on
Yeah.
the strategy, premium selling. If it's something new to you, it's something that you're still trying to understand. AJ's got a wonderful daily workshop that he puts up where he goes over the strategy, goes over some examples, and gives you a real world sense of what it might look to implement these in your portfolio. So we've got the link in the chat. So head on over there and check it out. Sign up now, watch it later, whatever works for you. We are live, as you can see. So if you have any questions, any tickers that you want AJ to go over, feel free to drop it in the chat. We've got his pick of the week coming. We've got our speed round, and we've got some trending topics that we're going to be reviewing. But before we get to that, we're going to take a little break, let you see the commercial that we've got. We're going to, take a break on our end, and we'll be back to talk trending topics. So stay tuned.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So I guess before we head into the trending topic, I'm curious as to your approach to the markets and investing on a Friday like this heading into the weekend. Is this something that you usually sit on the sidelines? Do you feel like the days like this we see like false breakouts, things like that?
Yeah, you always want to be careful because especially if you're trading directionally. So if you see folks ahead of the weekend buying or selling, you got to worry because they'll think about that over the weekend, and then they may get buyer's remorse or something like that. And the whole premise you entered in on a Friday before the holiday could change as early as Tuesday when investors come right back into the market. So directionally, I always do caution. When it comes to premium selling, though, premium selling is very forgiving because what we're profiting on is time passing by, not necessarily the directional movement of the stock. So if you've got your premium selling strategies in place, man, that's the most comfortable you can feel, because when those premium selling strategies are in place, you've basically created automatic trading bots. These things that'll take care and adjust the position for you, no matter what the underlying symbol does. So I feel really comfortable with my premium selling positions in place, going through any sign of like tumultuousness or buyer's remorse or any of these things that investors might throw my way. The premium selling strategies all self-adjust. So I feel really good about those.
And I know that you've mentioned in the past a few times that your strategy specifically, there can be a couple day window to enter and
Mhm.
exit trades because it's kind of end of day, like you're looking for candle
Mhm.
closes, things like that.
Yeah. I was talking to my program participants yesterday in our members only workshop, and the key is when it comes to premium selling, you've got a whole bunch of leeway. And when we're trying to figure out if a symbol is worth collecting income on, what we'll do is we'll put it into a test bed. We'll do what we call forward testing, and we won't forward test it in a silo all by itself. What we do is we forward test it with 10 other plans, 10 other strategies, 10 other tactics. And the 3 or 4 of them that start giving us income are the ones that we're going to just throw into our real money portfolios. So it becomes this ongoing kind of churn with our investment portfolio where we become portfolio managers and we just keep cycling in the winners and cycling out the losers, or cycling out the ones that have expired. And so it just is an ongoing kind of filling your portfolio with these winners. And when you find those winners through our forward testing process, yeah, I mean, they're very easy to trade. You can miss the timing by a day or two in both directions and still wind up with doubling your portfolio every few months, you know?
And that's and we'll go through some examples later on in the show. We'll go over your pick of the
Absolutely.
week and then some of the user questions. But before we head into some examples and a little in-depth action, we do have a trending topic, a question that I think gets maybe asked a little bit more often, especially for any new investors or anybody new
Yeah.
interested in getting into the market. And so I'll ask you the question to see if we can get a nice,
Discussion
yeah.
going.
And that is, what foundational knowledge should people have under their
Um,
belt in order to trade equities and equity options? And
yeah.
so I think, most new investors may hear, right, their friend, oh, hey, Bob made a killing trading, or Janice is doing so well in the market and I want to get involved. And it's like this race to be part
Yeah.
of it. And I guess do you need to have a little bit of background? Do you need to educate yourself?
Yes, but it's not usually in the areas that people think. And it's interesting. I've had a couple of these conversations this past week about folks who think it's as easy as me having like a switch on the wall with their name on it. That as soon as they be part of my program or something like that, that they'll be successful at being an investor. Um, and sadly, that's not the truth, right? I don't have like a pill bottle of special red pills that when somebody buys into our program, I can send them the pill. So a lot of folks think that the most important thing is setting up your brokerage account. And I would say that that's probably, step 10 on a 10-step process. If somebody wanted to prepare to really get an understanding of the market, and boy, this is going to sound a little bit, you know, people are going to maybe think, what is he talking about? I would actually say, go take one of these free Statistics 101 classes. Even if you took one back in high school or college when you were younger, go refresh yourself on Statistics 101. Statistics 101, I mean, not only is it good for investing and trading analysis, it's good just for looking at the world, right? Because you start to understand things like confidence and probabilities, and it helps you better make decisions. So, as far as being able to analyze a stock or an equity, and it used to be that you'd have to sign up at a community college or something like this to take a Statistics 101 class. But now with Udemy, I'm not sure how to pronounce that online school or any of the, you just have to Google Statistics 101 classes. Or if you're using your artificial intelligence, just say, help me, grasp Statistics 101 as quickly as possible. What should I focus on? And, Statistics 101 will give you an idea of how to better make decisions when there's uncertainty. And then when it comes to options, if you want to delve down the path of options, uh, taking kind of an understanding or looking through and understanding what profit and loss diagrams are. Because Sip and I talk about how there's, 27 different ways to trade options. And the option strategies, they actually have a fingerprint. And that fingerprint you can actually use as an overlay and overlay it on the patterns that you have in your charts and your volatility graphs. And you can determine whether this option strategy is going to fit for that pattern. It's almost like when I think about my little toddler and she has shapes that we put into holes that are in the same shapes, and you're trying to fit the square peg into the square hole and the round peg into the round hole. Really, that's what we're doing with our profit and loss diagram. So being able to understand and read profit and loss diagrams so you can see how the different strategies work, and how, even more important than reading them, is how you can overlay them onto your patterns to see if they will work in this specific case. So P&L diagrams for options, delving into options, and just a statistics 101 class is like kind of the best foundation you can have for being an investor.
And then you would probably say the brokerage account, and then maybe some sort of a support group like the one that you have every Thursday with your members, where you can learn from others, maybe watch some
leverage with pride is what I say. Leverage with pride. It's like cheating, but it's not cheating because you're looking over the shoulder. It's what grown-ups call cheating.
And there's enough resources out there. Obviously, we here at Trading Trainer are going to, want to try and get you to come on board with us and join our community, because I know that Thursday group is growing fast, a lot of excitement, and a few of the names that we cover on this show come directly from those discussions and those opportunities that present themselves.
Yeah, we're a whole bunch of professionals, right? We're a whole bunch of, I would say, if you were to classify us, we are investors that know that we can do much better than if we just give our money to a mutual fund manager or put it into a CD. But we've got bigger things on our plates, right? We've got bigger passions to have to be stuck in front of a computer creating a job out of trading, right? So we're looking for ways to use these option strategies almost so that we can turbocharge our investment, but also so that we could use our time in this world in order to pursue our passions, whether it be a career or family or, something that just lights your fire.
And so with that being said, let's go ahead and dive into some examples. Let's showcase an opportunity that is the one thing that I think is important to distinguish is it's not day trading, right? Like you're not looking at the markets every day. It's coming up with this strategy. Well, maybe you are looking at them every day.
We take a glimpse in the evenings. So the whole thing is that on our schedule, so after the market's closed, we take a glimpse and we look at all the symbols that we've kind of got on our headlights. But we only spend like a few seconds looking at each symbol. And then if one of the symbol passes the tests that we have, we'll do a deep dive on it. We try not to spend any more than about 20 or 30 minutes a day just looking at our symbols. And it's usually in the off hours so that we don't have to be, in front of our computer at a set time or set schedule.
All right. Well, with that, let's go ahead and dig into your pick of the week. This is AJ's pick of the week. This is a name we've covered in the past, and it's the national restaurant chain Wendy's, ticker symbol WEN, a name we have covered a handful of times on the show. AJ, are you seeing an opportunity setting up?
Well, so the reason why we keep covering Wendy's is because Wendy's keeps putting a lot of paychecks into our back pocket. So yes, what I'm seeing here on Wendy's is that we have pulled back. Now, I'm going to assume that you guys have been following me for a while and you have your initial covering position in place. And with that said, I'm saying that you probably own some shares of stock, or you own some back month call options that substitute in for stocks. So with that initial covering position in place, we're just going through the rinse and repeat process of create income trades. What we do is when we are at a high, when we detect that there's a top in this sideways choppy channel, we sell call premium and we buy protective puts. So we sell call premium that's near term. So it usually expires in about 3 to 5 weeks, usually with a strike price just above wherever we identified our top. And at the same time, we buy a out of the money, very inexpensive protective put, usually down here at the bottom of the channel. And that creates for us this really great trade zone that so long as we stay in that trade zone and time passes by, we create for ourselves an income. What's also nice is if we bust out of this trade zone, either to the top or the bottom, these positions self-adjust and take care of themselves. So all well and good. We got one of those opportunities about a week and a half ago to sell that call premium, buy that protective put. I just wanted to highlight this because it looks like there's going to be an opportunity here when we detect that there's a bottom, and we don't want to do this until we detect that there's a bottom, to buy back that call premium and sell back that protective option, that 3 to 6 month out of the money option. And a lot of people think that our strategy is based on the idea that we let that premium go to its expiration date. And I would say that for the majority of the time, that's what we do. But sometimes we get a signal that a bottom has been found and we're still a few weeks away from the expiration date of the option. And so I wanted to tell people that when you have premium sold, it's not awful to buy it back if you can buy it back at a much better price. So usually what I like to do is I like to calculate what would be the max profit of waiting until the expiration date. That would be 100% max profit. And then what I do is when I detect that there's this signal a few weeks early, I calculate how much of that profit can I capture and close down the trade right now. If I can capture 85% or more of the profit and close down that trade right then, I'll do it. I'll take 85% any time of day so that I can do the next cycle as quickly as possible, rather than just waiting the 2 weeks. Because as soon as I detect that bottom sip and it starts going up, I've now got two forces working against each other instead of the two forces being aligned. I have the directional component trying to increase, and I have the time passing by trying to decrease. And that could be kind of weird. And it puts me into a situation where, like, I have to white knuckle it. So if I can capture 85% of the profit, be done with all of this, and look for the next opportunity to create an income trade, I'll do it.
That's a great example of taking your winners, right? And
That's exactly right.
85% winning or winning probability, that's pretty darn good, right? Especially
Yeah.
with like a 2 weeks out, right? Where it
Yeah.
could reverse, right? Right.
Yes. Just take the money. And a lot of times it's a lot more than 85%. 85% is my cutoff there, but a lot of times you could capture almost all of the profit you would get, and you can be out of that trade. You have to remember that when you sell premium, if you think about the actual logistics of it, you're taking on an obligation that doesn't go away until either you buy back that obligation or the expiration date comes. And so why put yourself in additional time that you're under this obligation when you could just close it down and capture 85, 90, 95, 98% of the profit you would have captured waiting another 2 weeks? Got to weigh the difference between time and waiting. Now, if this signal were coming to me 3 days before expiration, and for instance, it's a question of waiting 3 days and getting 100% of the max profit, or right now getting out with only 85% of the max profit, then I'd wait the 3 days. But if it's like 2 weeks and I can capture 90, 95% of the profit, I'll capture it and close down the position early. So it's always a case by case basis. But I wanted to highlight Wendy's because when we get this signal, we haven't gotten the signal yet, but when we get the signal, let's look at what's the better decision to make.
All right. That's AJ's pick of the week. Wendy's, ticker symbol WEN. As always, if anybody watching has a name that they're looking at that they want AJ's input on, feel free to throw it into the chat. Otherwise, we've got a slew of other names to go over that we've been getting some questions on this week. And so let's just dive into our speed round. Our first name, this is Nancy from Trenton, New Jersey, interested in pharmaceutical, Abbott Laboratories, ticker symbol ABT. I don't think we've covered this one on the show.
I think it's probably because it's a little bit on the more expensive side. It's trading in the $100 range, but it's a big company, right? And they're very diversified. Everything from diabetes monitors to, all sorts of different things that, they're making our lives better. Taking a look at the chart looks really fantastic for being a premium seller. This is exactly what premium sellers want to see, is this sideways choppiness, but also sideways choppy where we've got these nice movements, these nice arcs from top to bottom. This is a really solid company. They're always reporting that they're earning money. They're also giving quite a chunk of that money back to their investors in the form of dividends. They've got clear support, clear resistance. And for us option traders, we also like to take a look at if there's liquidity, especially in the options that are 3 to 6 months out. So let's look at this November option. And as I get closer to the at the money options, these are the calls, these are the puts, you can see the bid-ask spread, about 15 cents. Here it's 20 cents. These are the at the money options, 20 cents, 30 cents over here. 30 cents. Now it's 25 cents. We're watching it live here. The open interest is present. And if I look at some of the other options, like for instance, an August option, the August option has even more activity. This is right in line with the type of activity we'd like to see on the candidates that we're trading. So yeah, I'm into Abbott Laboratories if you can afford it. That's the only drawback, is it's a little bit on the expensive side. And don't forget, you want to price in not the price of the equity or the substitute option, but rather you want to price in the risk of owning it. How much are you willing to lose? So make sure you size that position accordingly.
All right. That's Abbott Laboratories. Thank you, Nancy.
Thanks, Nancy.
Moving on to our next name on the West Coast. This is Chris in Irvine, California, interested in Virgin Galactic, ticker symbol SPCE. I'm assuming that's short for space.
Space. Well, hey, look, same pattern. What I like is this is really inexpensive. The company, as you would imagine, this is right on the cutting edge of, I think their focus specifically is commercial travel through low Earth orbit. So they're not going to be making money right now, and they don't. You can see in their earnings, but they could be losing a lot more than they are right now. So that's not the worst thing. But let's go back in time here. Let's look at about 2 years. So they had a huge little bump up in 2021, but since then they've come down and they've kind of settled around this $5. So let's come on back down to a 6-month chart. They seem to have their lows around $3.25 and their highs up here around $6.25. But same sort of pattern that we like as premium sellers. Although I have to say, just in the last 4 days, I don't like whatever happened. I'd have to take a look at the news headlines to find out why investors decided to start selling quite aggressively since the beginning of this week. But still, I'd be interested to see if we kind of nestle down here at 325 and start coming back up, because that would be a great opportunity for me to set up an initial position. And it's cheap enough, you got to buy stocks in lots of 100. And so, we're talking about $300 for a contract, the ability to be able to sell a contract of premium. So, depending on your portfolio, let's take a look at the option liquidity. Yeah, people are trading these options left and right here. There's a lot of liquidity, a lot of playing with the options. And, options, as much as some investors will tell you are risky, the truth is options can be used to hedge against risk. And I actually think that's what the investors are doing here. They're trading every dollar. And so let's do one last little litmus test here. Let's make sure if we were to do some trading at the $5 or $6, and then the other type of trading down here at the $4 or $3, it looks like we would be able to bracket our position quite nicely. And so, yeah, I think you could do some trading on this Virgin Galactic. I haven't yet. And so if you were part of my workshop, I would probably be telling you to throw this into your forward testing log and practice. See how it works in real time. There's no better way to split test and understand the results of a candidate than to actually trade it real time in a paper trading account. And that's what I suggest you do.
All right, Chris, I hope that was helpful. Always love the cheaper stocks. Makes
And that would be a fun one to own, just for the sake of saying, I own a little Virgin Galactic.
Yeah, although we definitely would want to see what that drop the last 2 or 3 days is based on.
Was all
Yeah,
about.
for sure.
I agree.
All right, cool. Moving on to our third name. This is a name that we've covered a handful of times on the show. This is Melissa in West Palm Beach, Florida, interested in Carnival Cruise, ticker
Oh, we
symbol
like the cruise lines.
CCL. I'm glad to see cruises are back up and operational.
Yeah. I mean, take a look at this pattern. This is also just a really nice pattern for us to be pulling income out of. And that's exactly what we do. We leg in and out of the premium selling once we set up the initial covering position. And guess what? I think, Melissa, your name sounds familiar. Have you been part of our program either in the present or the past, I wonder? The reason why I'm asking that is it looks like Carnival Cruise Lines is getting ready to identify a top in this sideways channel for us. And so what that means is it means two things. It means we could play this position in two different ways. The first way would be if we're not currently in the position, when we do identify the top, we could go ahead and start either shorting the stock. That means we borrow some stock shares from our broker, we sell them in expectation to buy them back at a lower price and then return them to our broker. So you need a margin account to short stock. Either doing that, or there's a synthetic equivalent to that, and that's buying put options. Buying put options is locking in the selling price on Carnival, expecting the price to go down. So either one of those, those two trades can act as a covering position so that when you go to sell put premium in the future, your obligation is your broker doesn't have to worry about your ability to meet the obligation from selling a put and collecting income. So when we identify a top, it's definitely possible, Melissa, for you to either short or buy some back month deep in the money put options to set up an initial covering position in expectation that in a couple of weeks when we identify bottoms, you're going to go ahead and sell put premium and buy for yourself some protective calls out of the money, probably up here with the $12 strike price, and then rinse and repeat, rinse and repeat. Now, the other way, and I'm guessing this might be what Melissa's talking about. The other way, or the other thing we might think about, is if you already did something at the opposite side of the channel. So if you not sold, but bought some stock when it was at a low price, or you bought some of those call options, now would be the time to sell call premium and buy those protective puts. So with our trades, we can actually play it both ways. We could play when the symbol is working its way down in the channel, and we can also play it when the symbol's working its way back up. So wherever you are in this particular position, you're absolutely right to say that it looks like there is a signal coming, and you'll want to take action on that signal. And there's plenty of liquidity, it looks like, on our option chain to be able to be successful. I mean, look, there's a 3-cent bid-ask spread. It means that there's a lot of people buying and selling these options. So I think you're good to go.
Yeah. It's crazy. I've never been on a cruise. Have you, AJ?
Oh, yeah. Cruises are fun. I always wonder. I've also been in Monterey Bay, California. I'm an avid scuba diver. So I've been in Monterey Bay, California, and I've been underwater when a cruise ship starts up, and it's deafening for the scuba divers, and it's deafening for all the
It's got to be
wildlife.
a giant turbine, right? Like it's got to be
Oh
like
my
the
gosh,
size of a building or something.
it's incredibly loud, and so I wonder about the impact on the environment. But when you're on a cruise line, I mean, especially the all-you-can-eat 24/7 soft serve and froyo booths, I mean, and the entertainment, and then you stop at all these wonderful places, and you get to spend a day kind of like hanging out at these like great destinations. I've been to Alaska. I've been down many times through the Caribbean. Cruises are fun.
Yeah, definitely on my to-do list. And now that we're past the pandemic scare, right? Because the cruise lines were definitely one of the hardest hit industries. So glad to see them rejuvenating and coming back to life, and people starting to travel a little bit more.
It's funny you mentioned cruises, because Carnival Cruise Line once, and this was back probably around 2010. They were courting us here at Trading Trainer to come on, and I didn't have the time back then, but they wanted us to like they were offering to give me a free, really nice room if I didn't mind teaching a couple of courses while they were crossing the ocean when people get bored. And so maybe I should pursue my contacts at Carnival Cruise Line again.
It seems like it would hit our demo market, right? People that have portfolios, that are on vacation, wanting to utilize, the most that they can.
What I remember is that, and then, again, I haven't been on a cruise almost in 10 years, but I remember that the internet was somewhat spotty. But I bet you, especially with things like Starlink and stuff, that maybe if you go on a cruise now, maybe somebody who's watching can write in and tell us if they've been on a cruise recently, and if the internet, you can get the internet now.
Yeah, I'd be curious what that. I mean, I'm sure you can get it, but how fast is it? Is a secondary question. So Melissa, thank you for bringing that one to our attention. Before we close out the show, we do want to let everybody know that AJ's one-on-one training program is back in full swing. If you're looking for a little bit more of a hands-on approach, if you want to work closely with somebody on analyzing your portfolio, going over the best practices, strategies, and really digging into the details one-on-one, AJ's one-on-one program is amazing for that. So I've gone ahead and thrown the link to learn more about that in the chat. Probably the best thing that you can do is scroll down to the schedule section, find a time that works for you, and someone will reach out and just have a quick chat about what to expect and if it's something that fits your lifestyle, right? So you always can go through the courses and watch on your own schedule, but if you're looking for a little hands-on training, we've got the perfect program for you. And the demand for that, we kind of maxed out for a couple weeks there heading into the summer, but now that
we've got some
space and the open invitation to everyone. So the link to that is in the chat. Yeah, and that seems to
That I gotta just if anybody is on the fence there, well, our guarantee is that any money you spend on us during the time you're in the program, we will make sure you make back. So think about that, because if you want basically a risk-free way of getting this competence in your portfolio of things that you know how to do, like I know how to manage my portfolio and I know how to grow it without having to like stay in front of the computer. If you want to learn that and have a guarantee that the money you spend on us, you'll make back while you're working with us, that's our guarantee, is that there's no obligation for, we want to make sure that this is something that you feel really good about. So by the time you're done with us, you will have made back all the money that you make with us. So if that pushes you over the edge, you should have that no obligation talk with one of our representatives and see if there's a match. See if you'd like to if this is the right time to pick up these skills.
And many of the previous members have succeeded in achieving that goal in different time frames.
All
of them. I mean, even better. But so if that helps you get over the edge, that's AJ's commitment. And you should be rest assured that other people are seeing success. So once again, the link to that is in the chat. It's a Friday heading into the holiday weekend.
Do you have plans for Monday, Sip?
You know what? I do not. Hopefully the weather's nice and we can get outside and do some nature things.
There you go. Same here.
Other than that, catching up on projects, maybe seeing some friends, enjoying life.
Yeah. Same.
And then so from a market's perspective, we're really just eyeing the Fed going into June. That's kind of the game plan.
Eyeing the Fed, making sure that this debt ceiling conversation comes to a close. And I think that we're going to watch the tech sector. I mean, the tech sector has totally overwhelmed the markets. They've pushed up the NASDAQ and the S&P 500. But if you look at other sectors, the other sectors are either treading water or actually dropping a little bit. So I'm expecting when we get back from the Memorial Week holiday to actually see a little bit of a pullback as the tech sector, as people, start to have all the tech sector excitement go by in the rearview mirror. So we'll see what next week brings for us. There's a lot of uncertainty around that debt ceiling, and I think that people are wishing that the Fed didn't have to make moves, but the Fed is probably going to have to make some moves. So we'll see. We'll play it again and we'll check in next Friday.
That's right. All right. Well, thank you for your time, and thank you to everybody that tuned in to the broadcast. We greatly appreciate it. If you've enjoyed it and you aren't a follower or subscriber yet, hit that follow, hit that like, hit that subscribe button, show some support. We're working diligently to get you good content every week to help you find some good investing opportunities and to educate you in the world of options and premium selling and these juicy investing tools. So with that being said, we'll catch everybody next week. Thank you guys for tuning in. I hope everyone enjoys the wonderful holiday weekend.
Take care, everyone. Bye-bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.